Okay, so get this. We're diving into Bitcoin and its potential to like revolutionize equipment leasing.
Wow.
We're talking about like financing bulldozers and excavators with Bitcoin.
Yeah, that's right. It's interesting because you have this age-old industry equipment leasing. It's the backbone of so many businesses, right? I mean, they need access to this equipment without the upfront costs. So it's always been a vital part of the economy.
Right, exactly. And then you've got this, this new technology that's kind of shaking up how we think about, value and finance in general. And you wouldn't think those two things would go together, but that's what makes it so fascinating.
Yeah, and it's more than just using Bitcoin to pay for, like, lease agreements.
Oh, yeah.
We're talking about, like you said, fractional ownership through tokenization.
Right. Like imagine like owning a piece of a bulldozer through a digital token while.
Yeah, and we're already seeing it happen.
Yeah.
There are platforms using like the ERC 721 token standard, which is designed specifically for unique assets. So they're using that to represent ownership of actual physical pieces of equipment.
So instead of having all this paperwork, you've got a digital record.
Right. A tamper-proof record on the blockchain.
That proves who owns what.
Exactly. And that's not all. Smart contracts can be programmed to handle the whole lease agreement automatically. Payments, penalties, you name it.
Yeah, so less paperwork. I like that.
And even things like maintenance schedules and insurance can all be built in.
Okay, that's pretty cool. But, let's be real here for a second. Bitcoin is volatile, right? I mean, it goes up and down like crazy.
Yeah.
Doesn't that make it risky to use for something like equipment leasing where you're dealing with, good money?
Oh, it's a valid concern for sure. I mean, the price swings can be dramatic. So both leasing companies and their clients, they really need to carefully consider that risk. But, there are ways to mitigate it.
Okay, how so?
Well, some platforms are looking at using stable coins.
Stable coins?
Yeah, basically they're cryptocurrencies that are pegged to something more stable like the US dollar.
Yeah.
So it kind of takes some of the volatility out of the equation.
So using stable coins could help smooth things out a bit.
Exactly.
That's interesting. Okay, so we've talked about payments, but how else can Bitcoin play a role in all of this? I mean, it's more than just a currency, right?
Right. Well, think about financial inclusion.
Yeah.
There are a lot of businesses in parts of the world where traditional banking is just not accessible.
Right.
But they might have Bitcoin.
Okay.
So you can imagine a small business owner in a developing country using their Bitcoin holdings as collateral to secure a lease. And that could bypass all the traditional financing hurdles.
So instead of needing credit scores and, jumping through all those hoops, they could use Bitcoin to access the equipment they need.
Exactly. It's about leveling the playing field.
That's a pretty big deal.
It is. But like any disruptive innovation, there will be challenges along the way.
Okay, so let's talk about those challenges. What are we looking at here? What are the hurdles?
Well, regulatory uncertainty is a big one. The rules around crypto are still evolving.
Right.
And that can make businesses hesitant, especially in an industry like equipment leasing, which is already heavily regulated.
So it's a lot of wait and see right now.
To some extent, yeah.
Yeah.
But that doesn't mean companies should just sit on the sidelines.
So they need to be proactive.
Exactly. Now is the time to start exploring and getting educated about this technology.
Okay, so what can they do? What are some specific steps they can take to prepare for this future where Bitcoin is a major player?
Well, for starters, they can partner with crypto-friendly payment gateways to make it easier to accept Bitcoin payments.
So that's like a bridge between the traditional financial world and the crypto world.
Right. And they can start experimenting with smart contracts, even on a small scale.
To get a feel for how they work.
Exactly. And maybe most importantly, they need to educate their teams about blockchain and crypto.
Right. Knowledge is power.
It is. You can't use it effectively if you don't understand it.
Okay, but let's not forget about tokenization.
Yeah.
I'm still curious about that. How does that work in practice?
Well, let's take a step back and really break down how a piece of equipment gets transformed into a tradable asset on the blockchain.
Okay, sounds good.
Okay, so we were talking about turning a piece of equipment into something tradable on the blockchain, right? Like, let's say a bulldozer.
Yeah, a bulldozer. Perfect.
All right, so first you take all the important details about that bulldozer.
Like what kind of details are we talking about?
Well, you've got the make and model, obviously, the serial number, maintenance history, maybe even its GPS location.
So it's like giving the bulldozer a digital ID.
Exactly.
Fair.
And all that information gets recorded on the blockchain, and that becomes the foundation for the token.
Okay, so the token represents the bulldozer.
Right, that specific bulldozer.
Yeah.
And that token can then be listed on a specialized platform.
Like a marketplace for bulldozers.
Kind of, yeah.
Yeah.
Investors can browse the listings, see what the underlying equipment is worth, and then they can make bids or buy tokens outright.
So you could buy a whole token and own the entire bulldozer.
Right. But you could also buy just a fraction of a token.
That's the fractional ownership thing we were talking about.
Exactly. The token can be divided into smaller units. So multiple investors can each own a piece of the equipment.
So it's like slicing up the bulldozer digitally.
Right. And each of those slices can be traded independently, which creates a lot more liquidity in the market.
Okay, I get that. But logistically, wouldn't that be a nightmare? Like if 10 people own a piece of a bulldozer, who gets to decide when and where it's used?
That's where smart contracts come in.
Ah.
All those details, the terms of use, maintenance responsibilities, even how the revenue from lease agreements gets split up. All of that can be programmed into the smart contract that governs the tokenized asset.
So it's like a built-in rule book for all the co-owners?
Precisely.
Right.
And because it's all on the blockchain, it's transparent and automated. So there's less room for disputes.
Okay, that makes sense. But what about the leasing company? Where do they fit in?
Well, they actually benefit in a few ways. First off, they can attract a wider range of investors by offering fractional ownership.
Okay.
And that gives them access to more capital and potentially lower their financing costs.
So instead of going to a bank, they could just sell tokens.
Right. And because tokenized assets are easier to trade, it frees up their capital more quickly. So they can expand their operations or invest in new equipment.
It sounds like a win-win for both the leasing company and the investors.
It can be. But what about the businesses that actually need to lease the equipment? How does tokenization impact them?
Yeah, that's a good point.
Well, the benefits might not be as immediate for them. But in the long run, increased efficiency in the leasing market should lead to lower lease rates and more flexible terms.
So they could end up paying less.
Potentially, yeah.
Yeah.
And having more options to choose from.
Okay, I see the appeal, but I keep coming back to Bitcoin's volatility. Wouldn't businesses be hesitant to get involved with something that's fluctuating so much?
It's a valid concern. And that's why stablecoins are so important. By pegging the payments and maybe even the value of the tokens themselves to a stable asset, you can significantly reduce that risk.
Okay, stablecoins make sense. But still, this is a lot to wrap your head around.
It is. Most people are still getting used to the idea of Bitcoin as a currency, let alone using it to finance heavy machinery.
Right? It's a whole new way of thinking.
It is, and that's why education is so crucial. We need to build trust and familiarity with these concepts.
So before we start seeing bulldozers on the stock exchange, we need to make sure everyone understands what's going on.
Exactly.
Yeah.
And equipment leasing companies need to take the lead here.
How so?
They need to educate their clients,
Yeah.
be transparent about how they're using this technology, and be open to answering questions.
Right. Build that trust.
Exactly.
Yeah.
But there's another big player here that we haven't talked about yet. The regulators.
Okay, yeah. What's their take on all of this? Are they on board with this whole Bitcoin revolution?
Well, that's a question we'll have to dive into in the next part of our deep dive.
Right. So where do the regulators stand on all of this? Are they, embracing this whole Bitcoin and equipment leasing thing? Or are they kind of hitting the brakes?
Well, it really depends on where you look. Some countries are being really proactive. They're setting up these regulatory sandboxes where blockchain and crypto businesses can basically experiment and innovate without too much red tape.
So they're kind of saying, come on in, test the waters.
Yeah, exactly. But then you have other countries that are being much more cautious. They're taking this wait-and-see approach, trying to balance innovation with protecting consumers and investors.
Right. So it's a mixed bag.
It is. And that uncertainty makes things a little tricky for equipment leasing companies.
How so?
Well, there are a lot of unanswered questions,
Yeah.
About tax implications and anti-money laundering regulations, and even how these tokenized assets are legally classified. It's all a bit of a gray area.
Okay, so there are some hurdles to overcome.
Yeah, but that's why it's so important for these companies to engage with regulators,
Yeah.
Participate in industry discussions, and advocate for clear guidelines. The more clarity we have from a regulatory standpoint, the better.
Right. Makes sense. Okay, so we've talked about the opportunities, the challenges, the regulations. What about the environmental impact? Bitcoin mining uses a lot of energy, right? Does that factor into all of this?
It's a valid concern. The energy consumption of Bitcoin mining, especially with proof of work, is something we need to address.
But there are other ways to mine Bitcoin, right? Like proof of stake.
Exactly. And those are gaining traction. So it's not a simple issue. There are nuances and potential solutions.
Okay, so it's not all doom and gloom.
Right. And I think as the technology matures, we'll see a greater emphasis on sustainability within the crypto space as a whole.
Okay, so let's wrap this up. What are the key takeaways here? What's the big picture when it comes to Bitcoin and the future of equipment leasing?
Well, I think the main takeaway is that we're at this really interesting intersection. You have this massive industry that's ripe for disruption, and you have this incredibly powerful technology that's changing how we think about finance.
So it's a potential game changer.
Absolutely. Bitcoin and blockchain could streamline processes, improve efficiency, reduce fraud, create new opportunities for everyone involved.
But it's not going to happen overnight.
No, there's still work to be done.
Hmm.
You need to overcome challenges, manage risks, educate people, and collaborate across industries.
So it's a journey.
It is. And the companies that embrace that journey, the ones that are willing to experiment and innovate, those are the companies that are going to shape the future of this industry.
It's an exciting time to be involved in all of this, that's for sure.
It is.
Well, that wraps up our deep dive into Bitcoin and equipment leasing. We've covered a lot of ground, but this is really just the beginning. There's so much more to explore and learn, and I encourage everyone listening to keep digging, keep asking questions, and stay curious, because the future is being built right now, and it's going to be wild.